Good morning. I'm Pete Najarian. This is the Take for Market Rebellion on this Friday morning. And I'll tell you what, a lot of pressure on the markets right now. We had the huge earnings. Now, we've gone through a big chunk already of earnings season, but this week and yesterday, that's what everybody was really focused on. And why? Because we're hearing from so many of the big names in technology. We hear about it all the time, the talk about technology, the talk about the NASDAQ, and now here we are. We've already gotten through the financials. We've gotten through a lot of the industrials. We've gotten through a lot of different other areas. We've had energy, we've had pharmaceuticals, but now it's technology, and that's front and center, and that absolutely is going to be an influence on a week that's been a very, very rough week. We're heading for the worst week since March, and that's really quite a statement. So yesterday, what did we look at yesterday? We had a market that was the roller coaster going up and down. Yesterday, a little bit more to the upside, thank goodness. We got about 600 points off of the lows in the first 5 hours of the trading session yesterday. NASDAQ up about 250 points off of those lows in the first 5 hours of the trading day. Gave back some of those gains, but certainly a nice recovery from the early part of the day with some of those lows. NASDAQ and the Dow, but take a look over at the S&P 500, which recaptured 3,300 for a while. We'll see how long that lasts as we look at today. Not so long is the hint there. So we also had some big runs going into earnings from Twitter, from Facebook, an absolute sprint to the upside. Apple involved in that as well. Now, what's really been a huge focus for a while now, and yesterday a huge influence on the markets, is the semiconductor index. And we've talked about some of the consolidation, some of the acquisitions that are going on there, and some of the dollars that have been thrown around there. And it has become something where I don't know that we're done with this yet. As a matter of fact, I have a feeling we have just begun. But we've had three monstrous acquisition deals. Yesterday it was Marvell. That was a $10 billion deal. We've had NVIDIA. That was a $40 billion deal. And throw in the AMD deal that we were just the other day, $35 billion. So there's been all kinds of acquisitions right now in the semiconductor space. I don't think that's over because we've seen how that area, and a lot of that has to do with what a lot of the focus has certainly been around the data centers and a lot of those that are trying to get bigger into that area. Certainly that's been a theme so far, but there are so many other areas that sometimes we don't even think about for the semiconductors. It's the industrial side. It's the automotive side. It's not just the technology side, but certainly that is a big portion of it as well. So there's all kinds of different uses right now and a lot of reasons why there are companies that might be great fits together. I think what we've seen so far have been three acquisitions where those acquisitions are absolute great partnerships, already had been partnerships in many cases, that can actually do something that can really be momentous going forward in terms of how those companies can fit together and work together. That's going to be something really interesting. So last night, earnings. Going into earnings, we're looking around, we're saying, hey, we got Apple, we got Amazon, we've got Facebook, we've got Google, we've got Twitter, we've got all these various names. And those names were performing pretty nice going into the earnings. And some of the names that were getting hit yesterday, you had Zoom, you had eBay, some of those names that were getting hit yesterday, but certainly a little bit of a drag. But nonetheless, the technology space, that was strong yesterday. Energy was strong yesterday as well. Healthcare hanging in there pretty nicely and strong. Industrials up about 2% for a big portion of the day. That was very strong. So we come in towards the opening today after hearing about the earnings last night. And oh my goodness, some of the pressure was on. It wasn't too bad, though. We were down in the Dow about 125 points. Not terrible, but still negative in the red. NASDAQ down about 87 points early. That was in the red. And unfortunately for the NASDAQ, that only continues to get a little bit worse as we get further into the day. Very quickly, we were down 150 points on the Dow. We're down over 100 plus points on the NASDAQ. The S&P gave up that 3,300 level. As a matter of fact, right now it's giving up even a little bit more. Down about 56 points right now. We're trading close to 3250 right now in terms of the S&P. NASDAQ definitely under pressure, and a lot of that's going to have to do with what I'm going to talk about in a second. But the NASDAQ right now, 280 points to the downside. That's a 2.5% move to the downside. 400 points now on the Dow. So that's down about 1.5%. So certainly you can see where the pressure is. It's the NASDAQ, and specifically we're talking about technology following the earnings. Apple, definitely one of those participants to the downside. That stock's getting hit. Amazon's getting hit. The one name that really was positive right out of the gates was Google. That was up about 7% with some very strong numbers. Facebook definitely getting hit. But it's pretty interesting because you dig into some of these numbers and you look at Apple and they actually had a record quarter. As a matter of fact, let me give you a couple of rundowns. Services up 16%, Mac up 29%, iPad up 45%, wearables up, revenue up 21%. So across the board, what was not up was the phone. Well, the focus on the phone, in my opinion, has been really an interesting thing because that seems to me that they've been transitioning for a while now. And the 5G, we know there's delays. We know the US is a little bit behind the eight ball. So you would think that a lot of that was sort of priced in. Apparently not. We also had a great numbers out of Amazon, crushed some of their numbers on expectation. Revenue was up 30+%. You had AWS, the cloud, that was strong as well. That stock getting hit. Facebook, similarly, they had some great daily active user numbers, monthly active users number. Those numbers up about 12% or so. Didn't matter. They're selling that off as well. So is there creating some opportunity? In my opinion, yes. But I think you got to be a little bit patient. You got to sit and watch and try to interpret the rest of the market and how that's going to, because potentially the markets could continue to push to the downside. And here's why. What are some of the catalysts? Well, we've got an election coming up just a couple of days away now. We're just looking at Tuesday, so that's coming up. That's certainly something. Stimulus, that's been a big portion of what a lot of people are focused on, and that's been getting dragged around for quite a long time. Oh, and by the way, the global pandemic, that heating up once again. It's not just here in the U.S., globally. Look at what's going on over in Europe. Are we going to see more shutdowns here? What are some of the reactions? So that's certainly a concern. This whole entire cocktail of what's going on in terms of what's affecting the market, certainly. And then add in earnings. And that just creates a lot of uncertainty, and a lot of uncertainty oftentimes leads to people selling. And that's kind of what we're seeing right now. As I mentioned, this week could be the worst week and likely will be the worst week since March. So that's saying a lot. We do have some unusual option activity for you, though. NEO, stock was trading about 30.80. We had a huge buyer, 5,000 of November, 37 calls. So these are close to $6-7 out of the money right now, but they're going for about $1.25. They were rolling up some previous buyers of the November 33s, not the entire thing, but some of that getting rolled up, it looked like at least. They are selling the November 33s, buying these November 37s. Either way, the November 37s were definitely being bought, about 5,000 of those for about $1.25. Electric vehicles, certainly an area that we're seeing more and more attention being drawn to that area, and the big guys are getting involved more and more. Hummer is just one example, but there are many others. Folks, have a great day of trading. It's going to be an unbelievable day. Oh, by the way, these guys over at the Minnesotan, and yes, they do. I work with these guys. They're unbelievable. What they do with the Giddy Up shirts, the Take shirts, we're doing the Take right now, and these bulls, it's just awesome. They do a great job. Unbelievable, the material that they use for the hats, for the shirts, all of that stuff. And this one is so comfortable, I can't even tell you. And a nice portion of this goes to the Twin City Lyme Foundation, which I sit on the board of, as well as my wife, who is the founder of it. Just a great organization trying to help people out with Lyme disease as best we can, and identifying that and all the rest of it. But some portion of that money from the sale of any of these shirts and hats and all of the materials at the Minnesotan. So that's over at the Minnesotan. It's just over here, not too far away. Great people over there. They have great stuff that's not part of ours. That doesn't go towards Twin Cities Lyme, but anything that's a part of this does. And so we appreciate any and all those folks out there that reach out and grab a hat and grab a baseball hat and grab a snow hat. They grab shirts. They have golf shirts. They've got these long sleeve. These zip-ups are absolutely unbelievable. The comfort of these is just awesome. Folks, have a great day of trading. I hope you have a great weekend, and we'll see you on Monday. Oh, and we got our cocktail hour this evening, 4 o'clock. That means it's 5 o'clock somewhere, right? 4 o'clock, we got the cocktail hour, just kind of reviewing the week with the Market Rebellion team. Folks, have a great day of trading.